And we are live. Good afternoon, everyone. Today, we will be discussing how the dollar is basically crashing. This is another one of my predictions that I've accurately called. We right now are looking at a chart, and the dollar is currently hovering right above 90. And I don't sit up here and make these predictions just because I want to be controversial or because I think that I know it all. It's really just, it's quite simple. The only way that we can grow our economy is through debt creation. Simple. It's not complicated. The economy will grow by creating debt. Now, when you go on crypto Twitter, and you look at a lot of the finance influencers and personalities throughout YouTube, you are hearing about this idea of a dollar milkshake theory, that somehow the dollar is going to appreciate with gold because based upon all other fiat currencies, the dollar is the best alternative. And because debt is denominated in dollars, then therefore that's going to put some type of a floor underneath the dollar. And again, the guy Brent Johnson is the founder of this theory, and it looks like he's going to be wrong for a second year in a row. Him and Peter Schiff, they have some a bet going on. He had to pay Peter Schiff a gold coin for last year's bet, and looks like he's going to be wrong again this year. What you have to understand is that people in the quote unquote finance community, many of them, they create a personality and a brand off of the idea of constantly taking the other side of the debate in the argument, right? There's literally a marketplace for being a contrarian, right? So if we are all sitting here and we believe that the amount of debt that the U.S. is holding, the monetary policy that the Fed is embarking on is going to be inflationary. And if you look at the way that inflation is calculated, then you would know that the Fed lies about that as well, that inflation is much higher than 2%. That inflation, if you look at most urban cities, it's closer to 10 or 12%, especially when you strip out all of the garbage that they add in there, then you can start to understand where we're going to go. So from quarter to quarter, maybe year to year, could the dollar retrace? Could the dollar bounce? Maybe. But the overall long-term trend for the dollar is down. And when you look at the overall purchasing power of the dollar, and see, that's one of the most key things for you because, see, inflation is a hidden tax that many of you don't know. When you start putting all of these things together, you can just simply arrive at the conclusion the dollar is going to go lower. Now we have the IMF coming out and talking about a new Bretton Woods agreement. Now we're hearing all of this talk about central bank digital currencies. So what does all of this mean for you? You have to start asking yourself important questions. Who am I listening to and why am I listening to them? And is this individual, do they actually believe the things that they're telling me? Or are they trying to sell me a subscription to their private Facebook group or a subscription to their media platform, right? Are they trying to get me to buy into their investment thesis? Or are they actually putting their money behind these different things? So that's what we will be discussing throughout today, because I think that this is very important. Many of you do not understand that your livelihoods is based in US dollars, right? You get up every day and you work for dollars and you save your money and you expend one of your most important resources, which is your time, for US dollars. And if you look at the actual trajectory in the trend of the dollar, this is the dollar's purchasing power since 1913, right? And if you take a dollar from, 1913 up until today, the purchasing power of that dollar has the purchasing power of five cents today, right? So if you hold dollars in your bank account year after year, you're losing purchasing power. It's still the same dollar, but it's what your dollar can actually buy you, right? And these things are extremely important. Now, when you look forward and you start saying to yourself, again, I'm not here to say which ideology is correct and which politics you should be following. When you see Black Lives Matter plastered all over the NBA floor, in every channel you turn on, you hear them talking about Black Lives Matter. And you listen to the founders of Black Lives Matter say that they are trained Marxists. America and the rest of the world, right? The elites, the people who make decisions, they are taking the world towards world socialism and world Marxism. I'm not here to say which economic system is better. I'm here to say to you how you should be thinking in terms of investing, right? We're talking about investing. When you understand what does that monetary policy look like when you're pursuing that type of ideology as a culture, right? When you want a Green New Deal, when you want free housing for everyone, free education for everyone, free college for everyone. Trust me when I tell you that it's not free. It's going to cost you. Either it's going to cost you through taxes, which is upfront, and most politicians don't want to do that, or it's going to cost you through inflation, which is a hidden tax, meaning you'll get paid, you'll get your free stuff, but your money will buy less, which will further push you towards poverty, right? So these are things that you really need to make sure that you're understanding, that nothing happens in a vacuum, and that these things, right, these things aren't free. Again, I'm not here to say to you whether you should believe in communism, socialism, capitalism. That's the argument for people who want to waste time. I'm telling you that we are going through the Great Reset. We are going through the Fourth Industrial Revolution. And when you see a Biden-Harris administration and you see people like AOC, Ilhan Omar, and Rashida Tlaib, and you see where the trend is blowing and going, it's easy to predict that the dollar is going to go lower, right? I have no crystal ball. I don't need a fancy spreadsheet. I don't need a team of analysts. I don't need any of that to predict where we're going to go, right? Because people want something for nothing, or there are groups of people who feel like they're owed something. Some people are rightfully owed. Others just want a free ride. But that's where eventually we are going to go. And once you understand that politicians are liars, once you get that, then it's easy to go where we're going to go. Because I have people come on my channel and they'll say things to me like, well, you're not an economist, so you don't know what you're talking about. Or, you don't have a finance PhD. You don't have a doctorate in finance. So why should we listen to you? Right? My work speaks for me. Right? When I sit up here and I say things and then 9 months later, those things are happening, right? That means something, right? Because see, the people with the credentials of the world, the Nouriel Roubini's, the Paul Krugmans of the world, the Ben Bernanke's, who was your Federal Reserve chairman back during the Obama administration, they didn't even see the housing crisis coming in terms of Paul Krugman and Ben Bernanke. They said everything is fine. The derivatives bubble is contained, right? How home prices may drop 5%. And then we went through one of the greatest recessions in human history. See, what you have to understand is the people with the credentials, the smart people, the smartest guys and women in the room, those are the people who are making the decisions that led us and are leading us to where we are today. So maybe as a people, we should stop listening to the people with the credentials. Maybe we should start looking at this information and looking at this data for ourselves so that we can understand what's going on, right? Because when Donald Trump was campaigning, and I'm going to play all of the clips, I like to build up where I'm going today and what we're going to cover. I'm going to play a specific clip for you where him and Hillary were debating, and he said out of his mouth, I quote, "The stock market is rigged and we are in a big fat bubble. The minute that the Fed raises interest rates, the stock market's going to come crashing down." And that same president came into office and pushed for negative rates, pushed for the Fed to cut rates, did $1 trillion plus tax cut when he didn't need to do it. He spent more money than any other president. And this is a conservative Republican president with a Republican administration. So what does that tell us? They're all liars. And once you understand that they're all liars, I don't need to believe in a dollar milkshake theory. The economy can only grow by creating debt. Commercial banks create debt faster than the Federal Reserve can create money. Why? Because of fractional reserve banking. So yes, you do need dollars to pay back the debt, but that's not going to stop banks from creating more debt. Why? Because it's very simple. If I'm sitting at the casino and I'm in Las Vegas and I have $10,000, but I know I have another $300,000 or $400,000 upstairs, and I know that I can call my friend to bail me out, am I going to be responsible at the gambling table? So it's the same thing what happens in our economy. What do you think banks are going to do knowing that they have the Fed that's going to backstop them. You think that they're going to stop creating money out of thin air? You think that they're going to stop fractional reserve banking? You think that they're going to stop speculating in the markets? No, because you create moral hazard and unintended consequences when you say, hey, don't worry. If there's a problem, the Fed's going to bail you out. So this idea that somehow because debt is denominated in dollars, that's going to put a floor under the dollar is just delusional, because then the pen comes and then what happens? You have to then go up, cut rates and inflate. So that's where we're going to go. So please do me a favor as you come into the live stream, like this video, share this video, subscribe, hit the notification bell, make sure that you set it to all. Also, make sure that you join my mailing list. I created a brand new mailing list. So some of you may need to resubscribe. A link to that is in the description below, because when I create videos like this, YouTube does not want to put out this content. They do not want people like me with smaller platforms talking about central banking, monetary theory, fractional reserve banking. They don't want you talking about that type of stuff, right? If I was making cat videos and a gossip blog, I would have hundreds of people and all of my notifications would go out. So please do me a favor and join the mailing list. If you want to contact me, a link to my Instagram is in the description below. Simply click the link, follow me, and then you and I can dialogue within my direct message. And for those of you who are interested in digital assets, cryptocurrencies, learning about blockchain technology, as you can see, the crypto market's on fire right now. I created my Tech Academy. We currently have a 7-day free trial going on. It is imperative and important right now that you start learning about this technology, because this is going to be the future, especially based upon what we're going through economically. The dollar is going to dramatically change, whether it's a central bank digital currency, whether we go towards a one world currency, it's definitely going to be a digital asset. That we do know. So learning about digital assets can definitely help you in terms of just navigating where we're going. If you're looking to be an entrepreneur in this space, if you're looking to be an investor in this space, this is why we have my Tech Academy. For those of you who are interested in getting a consultation and building with me on a deeper level, talking about investing and digital assets on a deeper level, you can come to my website, book a consultation, and we'll go from there. For those of you who are lifetime members, as I told you before, it was a lot of you who signed up. So there's a backlog on our consultations, but a lot of you haven't even actually booked your slot. So just book your slot, book your time so that we can get these things out the way and go forward. Also, a lot of you have not joined the Slack group. Guys, the Slack group is where you can get, instant communication from me, instant information. So you paid your money, come join the Slack group, right? It just doesn't make any sense. If you spent your money, come into the Slack group so that we can begin to build and, just bounce ideas off of each other and stuff like that. I also created some new content. There's a new project for the coding bootcamp. There's one more simple project that we're going to build, and then we're going to dive into databases. So if you're not really caught up, again, there's no rush, but just, pick up the pace a little bit, because we're going to pick up the pace in the coding bootcamp. And I think that covers everything that I needed to talk about. I don't think I need to talk about anything more. So if you can see me clearly and you can hear me clearly, type 1 in the chat and we can get started. Beautiful, beautiful. So we can get started. So I just want to read about 3 paragraphs real quick from this CNBC article. As you can see, this is the US dollar index. The dollar is getting absolutely hammered. And what I want you to understand, because see, people try to use the pandemic as the reason why the dollar is going lower. If you just understand this, every 10 to 12 years, something happens, whether it's the dot-com bubble collapsing, whether it's 9/11, whether it's the Great Recession, or whether it's right now the pandemic. That's the pin that pops the bubble. But every time the Fed goes to reinflate the bubble, they have to spend more money. They have to take on more debt in order to reinflate the bubble. And see, this is the problem that so many people don't understand. The only way the economy can grow is with debt. See, when you go to a bank and you take out a mortgage or you take out a car loan, that money did not exist until you signed your name on a dotted line. Once you sign your name on a dotted line, you spring currency into creation. right, into existence. And that money is going to work its way through the banking system. Now, before, there used to be, for every $100 that a bank held or every $1,000, they only had to hold 10% on reserve and they could loan out 90. So they could take your money and basically create loans off of that, right? So the commercial banking sector, what they do is they create more assets. They create the inflation, but the inflation is based upon debt, right? So this creates this boom and bust cycle because the boom is you going into debt. The boom is, think about this, everything in our economy is almost based upon debt. When you go get an iPhone, you can pay $30 a month to get the iPhone. Your car loan, debt. Your student loans, debt. Your home, debt. Credit card, debt. Like everything is based upon debt. So that's the boom. That's what makes the economy grow, right? Consumer spending. If you look at GDP, most of our GDP is based upon consumption. I believe somewhere around 70%, right? So when you're assuming 70% of our economy is based upon you going into debt. And then it's a domino effect because companies' balance sheets are based upon you consuming their products with debt, right? So that's the boom. And then the pen comes, the pandemic. And because no one is actually saving money and planning and holding money, when the pen pops, it becomes worse because every time there's more debt and leverage in the system. They keep levering up over and over and over again, right? So you take on more and more debt to grow. So that becomes the fundamental problem. So now looking forward with the Biden and Harris administration, what do you think is going to happen? The world is buying into modern monetary theory where debt and deficits don't matter. The world is buying into Marxism and socialism. Whether you agree with it or not, that's where they're going. Once you understand that, everything becomes simple for you. So it says the US dollar hovers around 2.5-year low. Analysts see further weakness in 2021. It says the US dollar is currently hovering around lows last seen in April 2018 as investors continue to pour back into riskier assets, and analysts expect this weakness to persist in 2021. As of Friday afternoon in Europe, the DXY U.S. dollar index was trading at around 90.68, down by around 6% year to date, despite having climbed above the 102 mark in March. The pandemic spread globally and sent investors running for safety because basically the dollar is viewed as a safety asset, right? So whenever there's, risk, people run towards dollars because it's quote unquote a fair trade, as well as gold. Let's look at where gold is trading at right now. Gold is sitting at 1837. Again, I believe gold is going to go much higher. I believe silver is going to go even higher as far as ROI is concerned because silver actually has industrial uses. So that's important that you understand that. Now, this goes back into the idea about Bitcoin because Bitcoin is trying to be digital gold. And the gold market cap is a $10 trillion market. That's how much the entire market cap of gold is worth. Bitcoin's only worth what, 350 billion as of today? We have so much more room to the upside because think about it. What would you rather have? Would you rather walk around with this or 12 words or 24 words that you can remember in your head? Or do you want to have 24 big bars of gold? Obviously, in the grand scheme of things, digital is just better, right? It's just that simple, right? As long as you're dealing with gold, you will always have to trust a third party. And that will always be the problem with gold, why it just wouldn't work. So this right here is a debate that Peter Schiff had with Brent Johnson. And I believe that this happened about a year ago. And this is the guy who created the dollar milkshake theory, the guy Brent Johnson. Again, that's why I keep trying to tell you, a lot of these people, I'm an OG, man. I've been around since going back to Inflation USA. There are people who come into conversations with the idea of they want to try to create a contrarian view to try to suck people into that idea that somehow the dollar is going to appreciate throughout all of this. Can the dollar rebound from quarter to quarter? Yes, but the long-term trend for the dollar is down because the powers that be want it to be. So let's just read what the dollar milkshake theory is real quick. So right here, it says, a big milkshake of liquidity has been created by the global central banks with their unprecedented monetary easing policy, which entailed injecting $20 trillion in euro, yen, into the global economy since the financial crisis of 2008. Dollar milkshake theory views central bank liquidity as the milkshake, and when Fed's policy transitions from easing to tightening, they are exchanging a metaphoric syringe for a big straw sucking liquidity from global markets. Despite all the talk about global de-dollarization, the USD currently facilitates a significant portion of global trade. Moreover, the entire investment world currently depends on the dollar and its money flow. Put simply, global loans made in USD need to be paid back with interest in USD, which is true. Here's the problem with his theory. Number one, let's take a step back. Can the Fed raise interest rates temporarily for a year, for a few quarters? Absolutely. But if you go back and you just look at the charts, soon as the Fed started, quote unquote, tightening and relieving quantitative easing, right, and selling assets back into the quote unquote marketplace, the stock market started to sell off. The minute that the Fed started doing that. Why? Because Wall Street is addicted to stimulus. That's it. 100% Wall Street is addicted to stimulus. And we know that because if you just simply come here to the Federal Reserve's balance sheet, right, you don't have to be a PhD economist or finance PhD. Just look at this. Right now, the Fed's balance sheet is sitting at about $7 trillion. If you go back into 2008, when we had the financial crisis, I'm going to play the clip for you right now. Ben Bernanke said, once we stabilize everything, we're going to start selling off our assets and reducing our balance sheet. Well, from 2008, mind you, this is trillions of dollars. The Fed's balance sheet just keeps going up and keeps going up and keeps going up. And now what I want you to do, this is some homework for you. When the Fed started selling their assets and reducing their balance sheet in 2017, 2018, 2019, the stock market started to sell off. So the Fed can never sell these assets that they're holding on their balance sheet. If anything, they're going to have to buy more. But see, what happens is you get this exponential growth where now you start getting this hockey stick. Because I told you, each bubble gets bigger. So therefore, when you bail them out, the bailouts have to be bigger. If you read the book, The Creature from Jekyll Island, you would see that bailouts have been going back to the 1940s, 50s, and 60s. But the bailouts keep getting bigger because the bubble keeps getting bigger. And it gets bigger and bigger and bigger and bigger. And once you understand that you don't have to be a PhD finance major to see this is going to continue to keep happening. So when they raise interest rates, they're going to have to cut them because that's the only way the economy can grow. It's no other way. Very simple. Even if you look at M2, if you look at money supply, right? How much money and currency is in circulation? Just look at it. This right here is the recession. And then look, it keeps going up. This is inflation. Now, I know what you're saying. Well, why do I care? Why should I care about inflation? Because you have to live. You have to eat. Notice this. Your income is not rising fast enough to outpace inflation. So your utilities cost more, but your income isn't going up. Your taxes are higher. Gas is higher. Tuition is higher, right? Your cost of living is higher because of the monetary policy that they are embarking on. So this is extremely problematic for everyday average Americans who are living. Now, the Fed says inflation's only running at 2%. I shared this image with you before, but I really think that this is important. I want to zoom in. So you can just, because I know some of you're not technical people, and that's okay. I like to simplify things on this channel. This right here is a McDonald's menu. This is the 1970s. This is a McDonald's menu in the 70s. You can get a Filet-O-Fish for 48 cents. You could get a gallon of milk for 20 cents. You could get milk for 20 cents. You get a hamburger for 28 cents from McDonald's. I want you to think about that. Right? Now, also understand that this is them pursuing this type of monetary policy. And they're saying, well, inflation is low. The Fed is mandated to create inflation by 2% every year. The Fed is mandated to make your currency lose at least 2% of its value every single year. So now what I want to do is I want to play Ben Bernanke for you. Now, first, let's play Trump. Or let's start with Ben Bernanke. think this is important so that we can understand where we're going.
The banks have,
Give me 1 second. Give me 1 second. I gotta fix something real quick. 1 second, guys. Sound switched from the cow digit. So let's see now.
Counts with the Fed.
There we go. All right. We're back.
Doubling the size of the Fed's balance sheet.
Is that tax money that the Fed is spending?
It's not tax money. The banks have accounts with the Fed, much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed. So it's much more akin, although not exactly the same, but it's much more akin to printing money than it is to borrowing.
You've been printing money.
Well, effectively, and we need to do that because our economy is very weak and inflation is very low. When the economy begins to recover, that'll be the time that we need to unwind those programs, raise interest rates, reduce the money supply, and make sure that we have a recovery that does not involve inflation.
He's not kidding about printing money. The Fed issues U.S. currency. That's why it says Federal Reserve Note on all the bills in your wallet. This is the Bureau of Engraving and Printing just a few blocks from Bernanke's office. The Fed's mandate from Congress is to put enough money in the system for maximum employment, but not so much that it sets off inflation. The Fed actually pays for itself and returns billions in profits to the Treasury. In a sense, Bernanke has been preparing for this emergency his whole professional life. He got a PhD in economics from MIT. He chaired the economic...
Right, so I'm not going to play the whole clip for you because I want to go somewhere. Notice how they're talking about his credentials, right? So now, I want to show you this. This is the inflation rate going back to 1971. And 1971 is important because that's when we officially started breaking away from the gold standard. We basically broke that last link with Nixon. But every single year, we've experienced inflation. Now, this is based upon the CPI, and I'm going to break down to you right now how the CPI is just a flat-out lie. But from 1971, every single year, except for about 2 years, we've experienced inflation. So this is cumulative, right? Every year, this is 4% inflation, 3% inflation, 6% inflation, 11, 9, 6, 7, 8, 11, 13, 10. And then I want you to look what happens. When we get to the 90s, this is what happens. Notice inflation starts to be 3%, 2%, 1%. That's because they changed the way that they calculate inflation. But if you just simply understand this, if anything you can take away from this video, this is the most important thing. $100 in 1971 could buy $642 worth of goods and services today. So that means that it would take $642 of today's money to buy the same amount of goods and services back in 1971. So it's important that you understand where this is going and how much devaluation has happened to your currency, how much purchasing power you've lost. If you took your money and you literally just sat it in a bank since 1971, it has the purchasing power today of about, if you took $100 and you put it in a bank account in 71, it has the purchasing power of about $14 today. That's insane to lose that much money by leaving your money in the bank. But see, it gets worse because if you look at the Chapwood index, the way inflation is calculated today, they take about 80,000 different goods and services and products and they put it in a basket. Because see, what a lot of you don't understand is that many of your entitlement programs is based upon a COLA, a cost of living average, right? So if inflation is only 2% every year, the government only has to increase the benefits that they give out through their pension programs and entitlement programs by 2%. So it's a way for them to save money and rob you, because inflation really, like in New York, is about 10% on a yearly basis, meaning that The cost of living is increasing by 10% on an annual basis. When you get that, you start saying to yourself, whoa, this is crazy. Look at LA, 11%, 10% in Chicago, 8% in Houston. This just is in 2016, right? And I think that it's important that you start understanding these things because, again, what do you think is going to happen with a Harris-Biden administration? What do you think is going to happen with the squad, with AOC, Ilhan Omar, and Rashida Tlaib, when they're telling you that everything is going to be free? You don't have to worry about anything. Free housing, free tuition, free healthcare, right? These things matter. So it says the real cost of living increase index. It exposes why middle-class Americans, salaried workers who are given routine pay hikes, and retirees who depend on annual increases in their corporate pension and Social Security payments can't maintain their standard of living. Plainly and simply, the index shows that their income can't keep up with their expenses, and it explains why they increasingly have to turn to government for entitlements to bail them out. It's because salary and benefit increases are pegged to the consumer price index, which for more than a century has purported to reflect the fluctuation in prices for a typical basket of goods in American cities, but which actually hasn't done that for more than 30 years. The middle class has seen its purchasing power decline dramatically in the last 3 decades, forcing more and more people to seek entitlements when their savings are gone. And as long as pay raises and benefit increases are tied to a false CPI, this trend will continue. The myth that the CPI represents the increase in our cost of living is why the Chapwood Index was created. What differentiates it from the CPI is simple but critically important. The Chapwood Index reports the actual price increases of the 500 items on which most Americans spend their after-tax money. Very important. Not what you gross and spend money. No, what you net and spend that net money on, because that's the actual money you have to live off of. No gimmicks, no alterations, and no seasonal adjustments. Just real prices. Shines a spotlight on the inaccuracy of the CPI, which is destroying the economic and emotional fiber of our country. Shows how our dependence on the CPI is killing our middle class and why citizens increasingly are depending on government entitlement to bail them out. So, one last thing I want to read from here. So, where do I want to go from here? I want to go back here because I want to play this for you because this is important as well. So,
Mr. Trump,
typical politician, all talk, no action, sounds good, doesn't work, never going to happen. Our country is suffering because people like Secretary Clinton have made such bad decisions in terms of our jobs and in terms of what's going on. Now, look, we have the worst revival of an economy since the Great Depression. And believe me, we're in a bubble right now. And the only thing that looks good is the stock market. But if you raise interest rates even a little bit, that's going to come crashing down. We are in a big, fat, ugly bubble. And we better be awfully careful. And we have a Fed that's doing political things. This Janet Yellen of the Fed is doing political by keeping the interest rates at this level. And believe me, the day Obama goes off and he leaves and he goes out to the golf course for the rest of his life to play golf, when they raise interest rates, you're going to see some very bad things happen because the Fed is not doing their job. The Fed is being more political than Secretary Clinton.
For the first time, Donald Trump actually told the truth about something. This was back in 2016 on the campaign trail. And obviously, once he got into office, he did everything but what he was campaigning and saying. He literally called for negative interest rates, and these are the tweets to prove it. As long as other countries are receiving the benefits of negative rates, the U.S. should also accept the gift. Big numbers, right? So he was pushing for negative interest rates. And why am I saying this? Because it's important that you understand that this is not about left versus right. This is not about Republican versus Democrat. They're all liars. Excuse me. They're all liars. And you cannot get it consistently wrong for this long. And it's a mistake. This is intentional. And I want to read something to you. Because, again, they're all the same. But one of my favorite books, and I require all my students to read this book, because once you read the book, The Price of Tomorrow, you will have a very, very good understanding as to what's going on. I want to read to you some quotes from Ben Bernanke leading up to the housing crash of 2008, right? The Great Recession that we had. Because, again, these are people who come from the world of academia, right? So if I'm the idiot, I'm the coon, the agent, the Uncle Tom, the self-hating black man, I don't know what I'm talking about. You shouldn't listen to me. You should listen to the Ben Bernankes, the Donald Trumps, the Janet Yellens, right? Because they all seem to know what's best for you. But yet, again, I don't care what excuse they use. It always leads back to you losing purchasing power, you having a reduced standard of living, and it keeps happening over and over and over again. So, on page 42, it says, on November 15th, 2005, and I actually have the video clip, and I'm going to share this with you guys if you don't want to actually sit here and listen to me read this for you. This is the clip of Ben Bernanke, and this is the beautiful thing about technology, is that you can actually go back and watch this and see how many times that these individuals have gotten it wrong. So on November 15th, 2005, this was Ben Bernanke. He said, with respect to their safety, derivatives, for the most part, are traded among very sophisticated financial institutions and individuals who have considerable incentive to understand them and to use them properly. The Federal Reserve's responsibility is to make sure that the institutions it regulates have good systems and good procedures for ensuring that their derivatives portfolios are well managed and do not create excessive risk in their institutions. This was Ben Bernanke during a Senate confirmation hearing in 2005. Well, we know that they did not have good internal systems for managing derivatives, and the derivatives bomb that exploded nearly took down the entire U.S. economy. This was your Federal Reserve head, the chairman, who could not see this happening in 2005. Here we go again. This is Bernanke on February 14th, 2017. He said, the weakness in the housing market activity and the slower appreciation of house prices do not seem to have spilled over to any significant extent to other sectors of the economy. In May 17th of 2007, we do not expect significant spillovers from the subprime market to the rest of the economy or the financial system. I can keep going on and on and on and on again of these individuals getting it wrong. So again, it's up to you if you want to believe these individuals. I'm not here to, argue with you and debate with you about the truth. You can buy into these ideas of the dollar milkshake theory. You can buy into these ideas of modern monetary theory, that debt and deficits don't matter. You can buy into the idea that governments can just print money out of thin air and it's going to be okay, and that Donald Trump's going to take care of you or Joe Biden is going to take care of you. Again, it's just the left and right. It's just the left and right wing of the same bird, and they're all flying towards the same destination. And that's the Great Reset. And we're watching it happen right before our very eyes. So at a certain point, you have to take a step back and you have to start saying to yourself, because some of you are asking, well, what should I be investing in? Again, this isn't financial advice. But again, just pull up a chart of gold, pull up a chart of silver, pull up a chart of Bitcoin, Ethereum. A lot of you like XRP. I hate it. Look at digital assets. Look how they're performing. It's happening right before your very eyes. Little old me in my office. I'm not a macro investor. I don't run a hedge fund, right? I don't have a team of analysts, yet I can sit up here and accurately predict this. And as I said at the beginning, the reason why I can predict this is because I'm telling you, the world has bought into the idea of global Marxism, global socialism. When you see Black Lives Matter plastered all over the place, again, this is not to make I'm not asserting or making, a claim that race or racism isn't real. I'm not saying that what happened to George Floyd should have happened. So please don't take my words out of context. We're talking in terms of investing. When you look at the ideology behind Marxism, when you look at the ideology behind socialism, when you have the leader of the organization saying that I am a trained Marxist, and you see all of the politicians gravitating towards that, and you look at Bernie Sanders, and you look at, the Squad and all of these different people, what do you think that their economic policies will look like? Do you think that they're going to want to, cut debt and deficits? Or do you think that they're going to want to increase debt and deficits? What do you think is going to happen? Do you think that we're going to get less inflation? Right? What do you think is going to happen? Now, understand, it's very important that you put these things in a proper context. Inflation punishes the worker. Inflation punishes the saver. Inflation benefits asset holders. Their policies are going to lead to more of income inequality, wealth inequality. Why? Because the Fed's policies are going to drive up asset prices. And we're watching this happen right now. Look at all of the stimulus that was passed. Jeff Bezos' net worth has increased during a pandemic because the way that the economy is structured where the debt and the deficits and the stimulus, it benefits asset holders. And if you read Jeff Booth's book, you're getting inflation in certain sectors of the economy, and you're getting deflation in other aspects, right? So the deflation happens with automation because you lose your job, and a robot can replace you, right? So that's deflationary in terms of employment is concerned, right? You're going to lose your job, but the inflation comes because the Fed tries to somehow fight that, and they're like pushing on a string. And see, you create all of this complexity, which allows these bubbles to blow in the first place. And you need to make sure that you are educating yourself on these things because, again, we are probably living through one of the most important times in human history right now. Seriously, the world coming out of this will not look the same. This is our 9/11. And I really don't think a lot of people understand that. And I think that that's extremely important. Now, I always like to read Jeff Booth's tweets because I think that this basically summarizes everything. It says, in the game Monopoly, once enough properties are owned by a single player, renters can't afford to pay rents and are therefore forced into bankruptcy, and the game ends. For those who have played, you will notice how systems work, i.e., once you have an early advantage, the game becomes easier because you have all the rents. To acquire more properties, add more houses/hotels, a positive feedback loop is created, concentrating wealth. So he's talking about the difference between the baby boomer class and the wealthy versus people like you and I, how they were able to play the game first and acquire assets. And this is important that you start understanding this in terms of income inequality, and you'll really be able to understand where we're going to go going forward. It says you might also notice that the wealth in the game might be due to luck. Landing on the right squares early in the game gives you a massive advantage. Right place, right time. Living through certain bubbles allows you to acquire wealth much quicker. Conversely, missing out on acquiring those assets early creates a negative feedback loop, which reinforces on itself. The poor become poorer until they become insolvent as they move around the board paying higher and higher rents. Fortunately, it is just a game. The game ends. Someone gets bragging rights, and all are giving a fresh start to win. When the game begins anew, with everyone being equal. The problem with this game is the game never ends because the Fed constantly steps in, props up asset prices, and bails out people. Now, this goes back to the dollar milkshake theory. Again, when the Fed created all of this liquidity back in 2008, and they were saying, well, it's not going to cause inflation because it's contained into the financial economy, right? Because liquidity just basically allows banks to do their day-to-day operations. Most of 2008 was really just a liquidity problem, right? Like no one wanted to lend to each other because no one knew who was holding a grenade to blow up, right? So no one wanted to have their money or their capital tied up in an institution that could potentially go under. So everyone stopped lending to each other and the velocity of money stopped moving through the banking system. But when you understand that, yes, that liquidity may not move without the financial system, but then because now people understand that they will get bailed out, what do you see companies and corporations and banks doing? They're taking on certain risks because they know that they have the Fed backstopping them, right? So now it creates this idea of malinvestment because well, it doesn't matter. I'm going to get bailed out. Look at the airlines, right? The airline companies, all they did was buy back their stock. It made it easier for them to beat earnings per share. Trump gave $1 trillion tax cut when the corporations didn't need it. They didn't take the money and invest in their employees, invest in CapEx, pay better wages, retrain their staff, pay down debt. No, they did stock buybacks and paid out bonuses and paid dividends to shareholders. And then now the pandemic hits, and because they weren't being, financially responsible, now they don't have enough money on their balance sheet. But then they can hold the world economy hostage and the U.S. economy hostage and say, listen, don't bail us out. You're going to lose jobs to China. You're going to lose an industry to China, right? So it creates this. It creates a moral hazard is the correct word of what's going on here, and it keeps happening because the Fed keeps intervening. So this is how I can predict that these things are going to happen because I predict more of the same. I predict more lying. I predict more people saying they don't know what's going on. And you have to be smart enough to start seeing this coming. And this is why you have assets like Bitcoin and Ethereum and decentralized finance being created, because people are looking for alternatives to this type of system, right? This Ponzi scheme, this debt-based system, right? This fractional reserve banking system, right? It doesn't benefit anyone. It punishes savers and it rewards debtors. It rewards people going into debt. Like I have idiots come on here and say to me, right? Oh, there's no such thing as good debt. Yes, there is. There's something known as good debt when I can go lever up my balance sheet 50 to 1, 100 to 1, not pay my employees properly, pay myself all type of bonuses, create a golden parachute where even if you fire me, I get to walk away with most of my compensation. Oh, and by the way, even if my, me running the company turns the company and makes the company end up going, bust, well, the Fed is stepping in and bail me out anyway. So if you believe that debt isn't good, then you're a fool, right? So there's something known as good debt and bad debt, right? If I'm getting cash flowing assets and tenants paying me rent, I'm going to debt all day long, right? Because the tenant's paying down my mortgage, right? So right now, bad debt is when you want to go out here and go take a vacation and go buy an iPhone. Good debt is when I'm putting that capital to work for me because, again, you have to be able to beat inflation. You're not going to beat inflation by saving money. You can create more money through debt than you ever can create by saving. And that's just a reality. But let me finish reading this and then I'll take some questions. So then he says, but what would happen if the same positive and negative feedback loops happened in life, which is happening now, with the winners acquiring more because they had assets first, concentrating their wealth and enjoying privileged access to the best education, medical, and other services? This is the wealthy. This is the financial elite he's talking about. And for the sake of argument, let's imagine in this life game that there was a giant force, let's call it a central bank, that would not let asset prices fall, which only concentrated wealth faster and wouldn't allow a reset of the game where new players had a chance. And this is important because, again, the way that capitalism is supposed to function is you have the right to pursue as much profit and gain as you want economically, but you also have the right to fail. But the Fed has removed that from most people where there really is no risk for them to fail, right? The free market is supposed to punish you if you don't do the right things, not bail you out with taxpayer money. Like if you go back and look at GM back in 2008 when they received all of the bailout money from the Fed, they then took the money, they still fired the people, and they shipped a ton of manufacturing overseas with the taxpayer money, and they still paid out bonuses. And I say this because it doesn't matter what type of administration you have. If it's Republican, if it's Democrat, it's the same thing. It's the same thing. It keeps happening. And that just amazes me. Every election cycle, I see these people, they get so worked up and they're arguing and fighting with each other. And it keeps happening, and it's going to continue to keep happening. And thank you for the donation, Nag Champa. I appreciate it. It definitely helps me free up some time. This is good game as usual. That's the best I try to do for you guys. So let's finish reading this, and then I'm going to take some questions. Because I have so much more stuff I want to get to, and I can't even get to it because, I start talking, and I lose track sometimes. Right? So it says, how long will the losers of the game keep playing the game when they realized that the game was rigged against them? What if they couldn't pay their rents, medical bills, education, with the game continuing to get worse? What if the game wouldn't end for them? Because the game of life just doesn't end for you. What would they do? More importantly, if you were them, what would you do? You might listen and elect leaders who tell you they will give you free money without asking where that money comes from, which most people do, or rise up against the winners and burn the game to the ground, revolutions, which we're starting to see with Antifa, or 3, play a new game where you had a chance, Bitcoin and gold. Those of us, that's the game that we're trying to play, right? We're trying to play a game, like Nipsey Hussle said, that we're trying to change the system. Because as long as you have this fractional reserve debt-based system, you're never going to fix these problems. The societal consequences of changing the rules of the game to stop the natural clearing function of markets and lock new players out is making the world ever more dangerous. The consequences are very predictable. And the crazy thing is, the same thing central banks are fighting against, prices falling because of exponentially advancing technology, might be the best game we ever played. And this is why I can accurately predict the dollar milkshake theory is garbage. I can accurately predict that the dollar is going to continue to lose purchasing power. I can accurately predict that the dollar is going to continue to fall because Big Claus told us it's time for a great reset. What does that look like? Your son will wear a dress, your daughter will grow a mustache, you will take a vaccine, you will own nothing. That's what they're telling you. The World Economic Forum is telling you that. I'm not saying this. I'm not here telling you whether you should believe in socialism, Marxism. I'm not telling you what your gender identity. I'm telling you what they're saying. The powers that be, they've deemed it this way. So you can sit up here, you can fight it, you can argue against it. It's going to happen. What does the Great Reset mean? The Great Reset means this. This is what the Great Reset means. The West has to reduce their standard of living so that we can move into a global world. No more of this idea of the West being a superpower. We want to have a conglomerate of nations have say. So it's no longer the West telling the rest of the world what to do. Now it's going to be India, it's going to be China, it's going to be Russia, and everyone's going to have a say. And government is going to tell you what you can and can't do. Your rights will be given to you by government, not by God. And as I said before, most Americans want this, right? You will have a social credit system. Everything you do will be tracked and monitored by a central database. You will have a central bank digital currency. Every transaction, every facet of your life will be tracked and monitored and controlled. And you will be told what you can and cannot do. Right? This is what will happen. Again, I'm not telling you whether this is good or bad. That's not my discussion. That's not my place to tell you what you should believe. I'm just telling you what's here. I'm just telling you what's here. Thank you for the donation, Blue77V. So I have so much more stuff I wanted to talk about, but again, You know, you know how I get when I start talking. Sometimes I go off on tangents a little bit, so it's hard sometimes to rein me back in. I'll take some questions right now though. Jay Green says terrible. Sounds terrible. Listen, this is what the American people want. The American people want socialism. They want Marxism. This is what the American people voted for, a man with dementia. That tells you all you need to know, right? Joe Biden barely can walk and chew gum. They voted for him. So, and before that, they voted for Trump. There's no way you can tell me that Donald Trump and Joe Biden are the two best people that we can find in this nation. There's just no way. If you cannot convince me that we have people like Elon Musk in this country, people like Chamath, Peter Woolley. There's so many smart people from different backgrounds, in STEM, and Donald Trump and Joe Biden is the best people that we can find. There's just no way you can tell me that. You couldn't convince me that. Like you couldn't convince me of that. No way. So I believe that we're going to have a correction in Bitcoin too soon. Let's see it here. That's okay, Roscoe. I'm not here to debate politics. If you believe that Donald Trump has done a great job, then you believe that, right? I don't. If you're not fixing monetary policy, you're not doing a great job. If you are allowing banks to speculate and create as much debt as possible and lever up their balance sheet, and then when it's all said and done, they give you the inflation, I can't say that you're doing a great job at all, right? When your purchasing power, when you have 5% of your purchasing power compared to $1 in 1913, I just can't say that. When you're leaving your presidency and the dollar index is sitting at 90, I can't say that you're doing a great job. I can't say that Donald Trump is doing a great job when Trump will create more debt than Obama, right? There's no way that I can say that he is doing a great job, right? In the federal government's fiscal 2020 year that is ending in 3 days, President Trump will have overseen a deficit exceeding $3 trillion, right? There's no way that I can say that he did a great job. And this is before even though remove the pandemic. The tax cut that he did for the rich was atrocious. All it did was further drive income inequality. That's all it did. It didn't fix anything. Right? So, and again, I think both of them are problematic. I'm not here saying Biden is, I believe that Biden and Harris is worse than Trump. I believe that dark days are ahead. And this is why you know where I stand. Gold and silver, guns, land, crypto. That's it. And you don't have to just buy Bitcoin, guys. Crypto is much broader and bigger and deeper than just Bitcoin, right? Bitcoin is just one alternative asset that you can buy into. You have Ethereum, you have Chainlink, you have Tezos, my bag. You have Augur, you have VeChain, you have Monero. There's other cryptocurrencies. Bitcoin's not the only one, right? Bitcoin right now is the most sound one, right? It's proven it has the longest proof of work, has the longest chain. But by far, there are other cryptocurrencies that you can look at. Let's see what's going on in here. Yeah, I heard about that great filibuster. I also heard that Donald Trump Jr. tested positive as well. I love tech stocks. 100%. I just mainly focus on crypto, right? I'm mainly a crypto investor. There are other things you can invest in. Like a lot of people, they're investing in the guy from MicroStrategy because he owns so much Bitcoin, a derivative play, rather than buying Bitcoin directly. Because just look at the market cap of Bitcoin. It's 355 billion. So in order for Bitcoin to double, it takes another 355 billion. So what a lot of people are doing is they're buying into MicroStrategy and they're getting insane gains by just buying into MicroStrategy. It's a derivative play rather than buying directly into Bitcoin. They're buying into his company because he owns so much Bitcoin in his treasury, right? So there's other things that you can buy like Tesla, medical marijuana. I used to play around in ACB, different another company, Canopy Growth. I used to play around in some. So there's other things you can invest in, guys. I'm not telling you that the end all be all is crypto. I'm telling you what I do, right? And for those of you who are in my academy, I always tell you, don't just follow a person because you want to follow them. Create your own thoughts, your own ideas. I don't just follow people. Prime example, I've been beating up on him a lot. Raul Paul. I've done decently well on my other main trades this year, but boy, oh boy, did I screw up my dollar call for the year. In the end, the price is the arbiter of all debates in financial markets. Exactly, right? Price tells all. He's been wrong. And he's been shilling XRP recently, which is absolute garbage. But, price trumps everything, right? Price trumps everything. So I tell people, know what you're buying, why you're buying it, and see the whole purpose of this video. Because a lot of you say, well, what was the whole purpose of this? You have to have a top-down analysis as to what you're looking to do. Why are you investing? Why do I say this? I understand what I'm investing in, and on a macro level, what has to play out in order for me to be correct. So if these things do not play out, I know at which point I'm wrong. See, some people, they just hold on to something as it continues to drop. If the Fed doesn't print trillions of dollars out of thin air, if the banks don't continue to fractional reserve lend, if we don't get the Green New Deal, free housing for everyone, free healthcare for everyone, if Black Lives Matter stops trending, if Antifa stops burning down stuff, then I'll be wrong. I don't think that I'm wrong. I'm pretty sure your son's going to wear a dress. I'm pretty sure your daughter's going to have pink hair and a mustache. I'm pretty sure of those things, right? I'm pretty sure you're going to take the vaccine when it comes out, or you won't go back to work, or you won't be able to go back to school. I'm pretty sure you're going to do these things, right? I'm pretty sure, like, the sun's going to come up, these things will happen. I'm pretty sure. I'm pretty sure Black Lives Matter is going to get bigger. They're going to get more donations. I'm pretty sure that most college universities are going to steer you towards liberalism and socialism and Marxism. I'm pretty sure AOC is going to get popular, much more popular. I'm pretty sure that Rashida Tlaib and Ilhan Omar are going to grow in influence over the Democrat Party, and our progressivism is going to win, right? Right? Oh, come on, Pure Gosu. You know I'm not doing that. I'm saying what most of you are going to do, not what I'm going to do. You know I'm not going to do that. You listen, man. They're not sticking nothing in me. That's not happening. No microchips. No, you're not going to manipulate my RNA. None of those things. That's not happening. So you don't even have to ask where I stand with that. This is why I've been self-employed for most of my life, right? So you guys, you don't have to ask me what I'm going to do. You know where I stand with that stuff already. I'm not wearing a dress. I have no interest in putting a dress on my children in the future. So I'm not, listen, more power to you if you want to do those things with your children. I'm not here to tell you how to parent. I'm not here to tell you how to raise your children or your family. You are entitled to do anything you want to do. That's not my place. So Red Pill Finance says, which country would be the best place to move? That is actually an interesting question, and I don't really have a good answer for that, honestly. I really don't know where would be a great. I believe that the Great Reset is going to capture every country, right? So, I don't really know where would be a good place to go. I don't believe you can. I don't believe that you can run from this now. I believe that it's to the point where it's here. I believe in just getting yourself prepared mentally, physically, and spiritually, and financially. That's the only thing. I don't believe in. Nowhere on this earth is going to be safe to just run to. Honestly, that's just what I personally feel. I think that you should be networking with militias, networking with like-minded people. I think that you need to have enough supplies on hand. I think that you need to have multiple doomsday plans. It's good to be prepared, right? If the worst happens, you're prepared. If it doesn't happen, hey, maybe just spend a little bit, extra money on some supplies. I'm a type of person, I'd rather be prepared. So that's where I stand. Right? That's just me. And I think building with like-minded people is definitely going to help. I would agree more with George Diaz said, or Jorge. I don't know if it's George or Jorge. Diaz said, look for pockets of freedom in whatever country you are in. So, what do you think about Seek VR? Have a partnership with Lady Gaga, Dwayne Wade, Katy Perry, Migos, and they have a $1 million market cap, hidden gem. I recently just came across that article. I haven't really looked into it, Rose Green, so I wouldn't have a good answer for you. Sorry about that. I haven't really looked into it. George is fine. Okay, no problem. Yeah, I've been hearing about Alaska. I have no intentions on going to Alaska, guys. I like New York City, but I have a love-hate relationship with New York City. I love New York, but then again, it's time to go. I wanted to move south. I've been telling you guys that for a while. I'm looking at Texas, and I like Texas, and I like Georgia and Virginia. I like being able to own firearms and guns is important. You know me, I'm a doomsdayer, so definitely important for me. Let's see what else is going. Let's go back a little bit. I wouldn't trust any Bitcoin mining stocks. Bitcoin mining is too volatile. Joel Hogan, I wouldn't look in that. I remember Bitmain was trying to IPO and they had problems trying to IPO as well. The mining space is a very, very competitive space, and it's the competition level in mining is extremely, extremely competitive. Yeah, I think that we're going to get some type of a correction in the stock market and crypto market. I just feel like we're due for it. The thing is, though, we're in a space politically right now and economically where, I mean, the Fed can launch a bazooka at any moment. Literally, the Fed can come out of nowhere and just drop a $5 trillion bazooka on the economy at any point. So it's like, it's very hard to look at the day-to-day, week-to-week, month-to-month fluctuations, which is why you have to have more of a long-term time horizon. That's why I try to tell people I don't really look at the day-to-day fluctuations and try to day trade these markets, because I'm looking more for a 3 to 5 year time horizon. And that's how I look at these investments. Like my crypto investments, I'm not selling anything till we hit $1 trillion market cap. Nothing is leaving out of my hardware wallet as far as selling it. As far as selling is concerned. David Castro says, any other digital assets that you like? I tell you guys all the time, I like big bull in Ethereum, big bull in Bitcoin, huge bull in Chainlink. The only way smart contracts are going to take off is with decentralized oracles. Huge bull in Chainlink. A derivative play off of Chainlink could be Band Protocol. I believe it's another one called Nest. Huge bull in interoperability and second layer scaling solutions like Matic, like Polkadot. I think Cosmos. Definitely take a look at those. Loopring with their ZK Snarks technology that they have. Huge. I love Monero just for the privacy features. In my opinion, Monero is better than Bitcoin. Too good. Aave is really, really good. I really like Aave for the different features that they're adding. It's really becoming more like a quote unquote bank, like an institutional bank. VeChain, bull on VeChain. Wi-Fi is doing a lot of things. I don't trust Wi-Fi. I wouldn't touch it, me personally, but they're buying up a lot of different, DeFi protocols and projects. So, they may eat up the space as well in DeFi. Synthetics is good. I don't own Synthetics, but that's really good. What else? Ontology. I have a bag of Ontology. Basic Intention. Zilliqa's okay too. I've been looking at Zilliqa a little bit recently. I like Ren. I really think that project Ren is going to be big. I really, really, really like Ren. What else do I own? I don't own Ren. 0x. I own 0x. Like the project. Hedera Hashgraph. Augur, I tell you guys about Augur all the time. Ren, I like this project a lot. I don't own it yet. I'm waiting for a pullback to get in. You know me, I don't buy on green, I buy on red. I tell you guys all the time. I don't buy green, I buy red. I buy when blood is in the streets. That's about it. Like I said, this is band protocol right here. This is a derivative play off of oracles if you want to play in that space. And that's it. I don't really go outside of the top 100. Well, yeah, well, Matic, I own Matic, so it was in the top 100. It's not there anymore. This is another protocol I'm looking at, Avalanche. They're trying to compete in the smart contract space. I'm looking for some more and I own Tezos. I don't know if I mentioned that, and a little bit of Cardano, not a lot. I sold most of my bag of Cardano too early. That was stupid of me. I should have held it. Looking at hindsight, I've been looking at the Avalanche project. I'm looking for some more smart contract plays. Because, you know, Ethereum may have some problems with the ETH 2.0 launch. So I want to make sure that I'm hedging myself just in that regards, right? Yeah, H-bar is good. I love H-bar. Yeah, Todd Mac. I've been looking into that whole idea, like, of, you know, Stellar and Ripple trying to get into the whole central bank digital currency space. That's, to me, honestly, that's just a lot of hype. They're trying to spend that. The more and more I look at Ripple, just the more disgusted I get in it. I just can't believe that people would even think that anything about Ripple is decentralized or anything about that technology is revolution. You know, like as if they're going to change anything. Now, Ripple the company, because a lot of you don't understand that you have XRP the token and then you have Ripple the company. Ripple the company is an amazing company. They're doing some amazing things like investing in other different protocols and projects and buying them up. Ripple the company is doing well. They're using you, the people who are buying the token, to fund a lot of their business ventures. But I don't see the XRP ledger doing anything, you know, in a central bank digital currency space at all. I don't see that. You know what I'm saying? So listen to what XRP Pioneer say. He says, this is the beautiful thing, right? These are my trolls. He says, you need an Emmy because you stay acting like a bitch. These, you know, like, so let me get this straight. I'm a coon. I'm an agent. I'm an Uncle Tom. I'm a self-hating black man. I'm moist. I'm a bitch now. I'm an idiot. I don't know what I'm talking about. What else is next? I mean, do my trolls have anything else to throw at me? Do you guys have anything more to throw at me? Right? Yo. Oh, man. Woo. It's like, oh, man. Right. Well, I'll help you out, XRP Pioneer. I'll let you stick around for about a year. I'll let you troll for a year, but I'll say bye-bye to you now. You know, man, these trolls, they just, guys, they do so much stuff to me. It's just, it's amazing. Like, it is amazing. Woo. Oh, man. How about this, right? This would be a good experiment. You guys post your top 5 projects that you want me to look at outside of the projects that I was just talking about, right? Post your top 5 projects in the chat and let's see what you guys have. And based upon the consensus inside of the chat, I'll look at your projects, right? You know the funny thing, Red Mag, I own Algorand. I don't know how it ended up happening. Maybe I had some crypto and Coinbase or something, but they I have a lot of tokens in there for some reason. I think it's like $3,000 worth of Algorand. It just popped up in my wallet. I don't know how it got there. So I'll look into some of these projects. So can I see SHA-1 Algo? Okay, so I'll look into this a little deeper for you guys. I'm trying to level up my finances And these cats on here playing and shaking my head. XRP pumps because the market cap is low, right? See, this is what people don't understand. The market cap is only $26 billion. So it's easy for the price to pump because it's a baby. It's tiny. It's not hard to pump them. It's not hard for it to pump. RSR, track, ETN, HNT. All right. So a lot of you want me to talk about Zilliqa. So we'll do that. We'll probably do that, let's say like Wednesday. Zill. So a lot of you want to talk about Zill. All right. So let's write some of this stuff down. Let's see, Zip. So see, a lot of you keep talking about Zelle. Put this in the iPad. Yeah, everyone. I like Zelle from what I've seen recently. Yeah, Chainlink by far. You listen. You know Chainlink. I dived heavily into Chainlink at $7. I told you guys my kill zone for Chainlink is anything between $3 and $7, or $8, because I brought it up to like $7.70. I'm diving in big. I missed out on Chainlink for a while. I just didn't pull the trigger because I own so much Ethereum and Bitcoin. It's insane. So it's like, doesn't make sense. Energy Web token. I like Celsius, so we'll put that on the list. We could talk about that. So we have Zill, we have Celsius. What else you guys got? Celsius. So. All right, what else you guys want to talk about? Let's see what you guys want to talk about. Algo, OXT, Comp, Aave. I love Aave. I love Aave. I dive heavily in that. I'm still working on the DeFi course. I dive heavily in that. I had to go change some things in the BNB token. That ain't what we're talking about. We got Falcoin. See what else you guys got in here. Civic. It pumps because they have a religion around the coin. If you go to YouTube and type in crypto, you will definitely run across XRP videos. 26 billion being tiny is subjective. It's not. I mean, Rose Green, you can sit up here and say it's subjective, but it's not subjective. In the world of finance, when the stock market collectively is worth $100 trillion plus, and crypto is worth $500 billion, that's not subjective. It's tiny. Like, it's extremely tiny in the grand scheme of finance. It's a baby, and especially like if they're trying to be payments, like if they're trying to be a quicker, make payments much faster. That's not tiny. That's tiny. That's not big at all. But I mean, tomatoes, if you want to go that way. Yearn, WBC, Wrap Bitcoin. There's nothing really to talk about Wrap Bitcoin. Maker, VeChain. Waves, Maker, Tron. And Tron is absolute garbage. So far we got Zill and Celsius. That's Zill and Celsius is what I see mainly what many of you have. KNC, XLM, right? So we'll add XLM to the list just because I've never really spoken about it and I haven't dived too deep in that project anyway. So far we have Zilliqa, Celsius, and Stellar. Oh, I own Polkadot. Polkadot's a beast. Polkadot's going to be amazing. I lost a lot of money in Decred. I lost a lot of money in Decred, man. I don't like that project. I don't like that project at all. Kusama. Yeah. So we only got 3 so far, guys. All of you have like so many different projects you like. So I guess we'll just go with those 3. Go with those 3. So let's check the chat, see what else is going on in here before we get ready to wrap this up. Someone said more Billy Porters. Come to ATL, you know it. I'm in Yonkers. Why not Florida? Florida's not bad. Relative finance. Florida is a little crazy, but it's not bad. Says I agree. It's tiny in a broad scope, but not tiny in comparison to other more better projects. I agree with you 100% with that, Rose Green. I agree with you 100% with that part. H bar 200 million and has Google as a partner. XRP is BS and it works 100x more. I agree 100% with you on that. I believe that there are so many projects that are going to disrupt bigger markets. The technology is better and you can do more with it compared to Ripple. 100%. There's no debate with that. I agree with you. Yeah, I read that question earlier, Rose Green. I saw the article about that. I haven't really looked into that project yet, but I'll look into it. We could add that to the list. I believe that I told you guys I was working on my own version of like a non-fungible token, an NFT project. It's kind of like dead in the water right now, but I'm still like, brainstorming it, working on it. NFTs are going to be huge. Remember, Ethereum, you have to look at Ethereum or just DeFi in general, not even just Ethereum, because DeFi can happen on other smart contract platforms. Ethereum is a gravity well for all financial assets. And when you start thinking about tokenizing, physical assets in the real world, collector items and, real estate and wine and just so many art, so many different things that you can take from the physical world and tokenize it and bring it onto the blockchain. That's going to be extremely, extremely powerful, right? Bitcoin being a store of value is just one aspect of, crypto. Satoshi was very smart in trying to fix currency, but currency is just one aspect of finance. So when you look at DeFi, it's much broader and much bigger than that. Much bigger than that. So. But what I'm going to do is I'm going to wrap the video up here, guys. We're coming up on an hour. I don't like to go too long. I can sit here all day long and talk. At the end of the day, I want to leave you with this. This is not to attack the dollar milkshake theory. May end up making you guys some money short term. Long-term trend for the dollar is lower. That's just the reality. And I sit here and I can make these predictions not because I'm a financial advisor, not because I'm a finance PhD or an economist. Again, I just look at the trends and look at where the wind is blowing, where the country is, which direction is the country going in, and what do people want. And as I said to you before, people are buying into the idea of Marxism and socialism. And if that's what people want, then the will of the people will be answered. And if people want more inflation, if they want more free stuff, then that's just going to devalue the dollar. And it's going to be beneficial to those of us who own digital assets. Remember, guys, this is not a politics channel. This is a business channel. This is an investing channel, right? This is the economics channel. We talk about things happening in the economy and business. So for the country, dark days are ahead. But for those of us that own digital assets, we're going to thrive in this climate where there's going to be a lot of money printing, a lot of dollar debasement, and a lot of dollar devaluation. And that's just where it's going to go. Can the dollar bounce back from quarter to quarter? We know that it could happen, but the long-term trend for the dollar is lower. That's just the reality. And you need to make sure that you are positioning yourself properly to capture this wealth transfer. And I keep trying to tell people that it's not about, being right or wrong. It's not about your political affiliations or any of those things. It's about just what the truth is. This is what's happening in the world. Everything's going digital. Digital assets are here to stay. And you need to make sure that you are positioning yourself correctly to capture this wealth transfer. So this is why I created my Tech Academy. For those of you who do not know what a digital asset is or what they are and how they work, for those of you who are interested in cryptocurrency and blockchain technology, this is what I'm here for, to teach you this. And we have a free 7-day trial. You are welcome to come and test it out. For those of you who are looking to interact and talk with me or ask me some questions, you can book a consultation. It's right here on the website. A link to my Tech Academy is in the description below. For those of you who are students, there's a new assignment, very simple assignment. What was the new assignment that we just did? I believe we were, what's the name? Wow, I have so much going on in my mind. There's a new assignment for the Coding Bootcamp. I can't think of it off the top of my head right now. For those of you who are lifetime members, book your consultations. Answer the emails that you received. For those of you who are members of my Tech Academy, come over to the Slack group. You're paying your money. Come into the Slack group. Let's build with each other. Let's go from there. And that's about it, guys. I'm going to wrap the video up here. I'll see you guys tomorrow. We'll do another live stream, and have a blessed and beautiful day.